Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. I am your host Pushpendra Mehta. Joining me today are Jack Large, editor of CTMfile, and Ben Poole, writer at CTMfile. Welcome back, Jack and Ben.
Good to be here.
Thanks, Push.
Thank you for taking the time to share your thoughts with us on topics that impact the world of cash and treasury management. It's time to get some deeper insights from you on our topics for today, namely generative AI finance and treasury tool, real estate sector and real-time payments, foreign exchange payment services for treasurers, sustainability-linked financing, and finally, interest rate hikes in the United Kingdom. Our audience can read these articles and also research content more deeply by visiting ctmfile.com or by following the links in our show notes. Let's get started with the discussion for today. Our first story for today is Trovata leveraging OpenAI's ChatGPT technology to launch the first generative AI tool for corporate finance, accounting, and treasury departments. The new Trovata AI feature enables customers to complete financial scenario planning, answer complex financial questions, or compile financial reports all nearly instantaneously. Ben, if I may start with you, what benefits do you anticipate Trovata AI will bring to corporate treasury? And do you have any concerns about the accuracy of financial planning and reporting using generative AI technology?
Thanks, Push. Yeah, it's an interesting tool that we're discussing that Trovata has come up with. I was reading some of the complex questions that perhaps treasurers could ask the Trovata tool, such as give me a report showing all my company's cash outflows by cash flow type, or what is our company's cash high and low point in total across all banks and bank accounts in the last 12 months. So, it's questions that treasurers need to know answers to. I'd wonder, how big a leap ahead this is compared to the sort of data reporting and scenario analysis tools that are already in place in TMS and ERP systems. Maybe this is an equivalent to like Alexa or Siri in your TMS, perhaps. But it's definitely something that's coming and that companies are I think preparing for a lot. We discussed just a couple of weeks ago that KPMG survey where 65% of US executives believe generative AI will have a high or extremely high impact on their organization in the next 3 to 5 years. That same report had a note of caution, I suppose, that maybe corporates aren't quite ready to interact with this technology yet, with only 6% of organizations having a team in place to evaluate risk and implement risk management strategies as part of their overall generative AI strategy. So I think it's a very new and exciting, in some cases, development. I think it needs to prove itself to treasurers before they would actually sort of invest in something like this, and just making sure that on the risk management side that you're covered for making sure that you're getting exactly the right information that is in your systems coming towards you.
Yeah, I got a similar concern that how the hell do I check the results? So for example, one of the examples was provide me with a list of cash inflows in US greater than $10,000 for the last month. Well, how do you phrase that? Do you just say that, verbally say that, or do you have to write it down? And how do you check it? And how do you proportionally work out whether this is sensible or not? I can't see the way of answering it other than doing it with the old technique, then looking at the results with the new generative AI answer and seeing whether they're the same. I would need not just one or two examples, but many months of examples and iterating around it to actually say, yeah, okay, that works. It's hugely different. And I mean, they say at the end, Brett Turner says of Trovata, by the way, I think Trovata needs to be congratulated on the speed at which they've come up with this. It's really an indication of the speed at which Trovata are developing. But he says it allows teams to operate with greater leverage and activity while still managing business risk. Yeah, but, and also what does it do to the number of people I need to operate my corporate treasury department? I think in the long run, once it really proves itself, this could be a number changer in terms of the average number of people in a corporate treasury department. But I remain to see it prove itself.
That's a great point, Jack. I think we've all been on like those bank chatbots. If you go on like your bank's website and they're like, oh, we've got the chatbot that'll help get you to the right place. And you try and converse with the chatbot in the text box and it doesn't understand what you want or what your specific inquiry is. So that's the test that tools like this Trovata tool need to be able to pass and demonstrate that they can clearly understand what they're being asked and are delivering the data insights that the treasurer is actually looking for, rather than just sort of wasting time in terms of getting the results. So it's very exciting, but let's see it proven, definitely.
And I think it's going to be a bonanza for consultants actually saying, okay, we'll test it, because I would want somebody to test it. And prestigious consultancies like PwC, I think they're going to make a fortune here, because the finance director is going to say, well, who's checked it? Does it really work? Unless you've got a prestigious consultancy saying, yes, it does, they're going to go, oh, no.
Totally agree.
Interesting perspective, Jack and Ben. Lot to wait for, lot to look forward to when it comes to generative AI. So let's move forward to our next story, from generative AI towards real estate sector and real-time payments. Is real estate sector ready to embrace real-time payments? Let's look at that. At the center of the rapidly evolving payments landscape are real-time payments. With the ability to clear and settle transactions within seconds, even on weekends and holidays, real-time payments are gaining traction globally, given their popularity with businesses and consumers. To ascertain the interest of the real estate industry in adoption of real-time payments, Payments and the Clearinghouse collaborated to produce the survey report, Corporate Changes in B2B Payment Practices, the Future of Real-Time Payments in Real Estate. According to the report, while just 1% of real estate firms currently use real-time payments, 90% plan to adopt real-time payment solutions to receive payments, and 77% plan to adopt these solutions for making payments in the next year. Despite instant payments benefits, obstacles to their adoption remain. Jack, upon reviewing the payments report, what, in your opinion, are the major barriers to real-time payments adoption by the real estate sector?
Oh, the phrase at the end of your report was the foremost challenges being legacy IT infrastructure. And that doesn't just apply to the corporate treasury department, but it applies to the whole infrastructure inside each of the different companies. And I see this being a very slow burn. It is important, but I would not want to be very sure that my house payment, the whole of my house, wasn't wishing us somewhere else other than where I expected it to go. Again, it needs to prove itself. I think that's the problem.
You know, I think the survey shows the appetite for corporates in the US real estate sector to use real-time payments. And it's definitely something that I think third-party providers, a little bit going back to our previous story, third-party providers are going to be very keen to service. For example, yesterday in CTMfile's industry roundup, We covered a story that EM Transfer, who are a real estate specific cash management platform provider, are going to offer real-time payments over the clearinghouse's RTP network through KeyBank APIs. So I found that really interesting. Obviously the RTP network provides additional features and capabilities that can be streamlined through EM Transfer's real estate payment process. So there's like immediate confirmation of receipt to all parties in the real estate transaction that the funds were received. And obviously, seeing as the RTP network is 24/7, it eliminates that concern of missing wire cutoff times and perhaps having to pay a per diem fee or a seller's payoff amount. There's those sorts of benefits possible. And with the APIs from KeyBank's API developer portal, EM Transfer can integrate its cash management offering with the customer's KeyBank account, which will let customers create and categorize the transfer of funds as needed. And it's possible to electronically and securely collect bank account information or written authorization or e-signed lien waivers, for example, from consumers in a familiar user experience. And users can initiate the transfer of funds directly to and from their accounts using appropriate payment rails to them without requiring a third-party processor to be involved. So that's one example of just kind of how third-party providers can sort of service this need that we saw. And obviously, at the end of the day, buying and selling properties is particularly stressful for the end customer. So, getting some of those reassurances that are being promoted on that story that I just mentioned suggests that adopting real-time payments with the additional measures and reassurances that they can have in place could be a bit of a no-brainer for real estate companies. So again, it's a one to approach cautiously, but I think some of the measures that are in place in real-time payments are a step above what we used to in maybe wire or ACH or, heaven forbid, check payments.
Yeah, the most interesting thing about this survey was that the place where they're going to see most growth is from payments that are made same day but on the ACH, and then they're going to do it in real time. So already you've got the infrastructure in place in some bits of the real estate market to take a move to real time. That's easy. But when you go further down the spectrum of automation, then it becomes much more complicated.
Can I ask you a follow-up question, Jack and Ben? Do you think the survey says that it is likely that checks, standard ACH, and debit cards are most likely to replace real-time payments? Do you concur with this observation?
Well, I think that what you can achieve with real-time payments, it's not just the real-time aspect of it. It's like I was saying, in terms of the visibility, the transparency of the payment across the life cycle of a payment that makes it quite attractive, particularly for corporates. And so when you can have that plus the instant nature of it, I think it just puts it kind of above, particularly paper checks. The amount of issues security-wise and time-wise with checks is unreal. And we used to be relatively big on checks in the UK, but nothing compared to the US, it seems so embedded in US payment culture, understandably from certain perspectives, but there are much better ways to send a transaction in ways that help your company and also help your suppliers or your end customer. So I do think that, particularly with the amount of choice that's coming up in real-time payments in the States, I think you could get some real traction and it will start to impact on those other payment methods.
Let's move on to the third story for today, which is about StoneX and TIS partnering together on foreign exchange payment services for treasurers. StoneX and TIS will combine the experience in cross-border payments and cloud-native payment solutions to improve service and coverage for corporate treasury and finance teams. Jack, how do you think that this StoneX and TIS partnership on foreign exchange payment services will impact corporate treasury?
When it's another option for corporate treasury, I don't actually think it makes much difference. This is a classic example of you're getting partners between different parts of the rail or the different rails and coming together. TIS are very good at what they do. StoneFX are good at what they do. So you're getting more and more complete solutions. I don't think it's going to make much difference to the corporate treasury department. They'll use it as and when appropriate. I don't see this as being a major leap forward. It's just a natural progression of the way technology is moving forward with increasing partnerships.
Yeah, I agree with that. And I think treasurers in general are looking for ways to perhaps automate payments as they're looking at many of their processes and, try and get additional efficiencies in there, connecting systems to get more straight through processing. And I think that's particularly appropriate to payments. And quite often that means they're not going directly to their banks to make the payments, but instead making them in their TMS or ERP and getting them to come straight through to their banks that way. And I think that's one way of targeting greater efficiencies. But what that can overlook sometimes is whether the payment is domestic or international. So I think there are positives and negatives in that approach. On the positive side, you're getting that efficiency of the straight through processing as well potentially as reduced bank fees if you're not going directly to banks to make those payments. But on the downside, if you're not considering the source, the location of the payment, incoming or outgoing, that could mean that you're not necessarily considering some of the FX elements that are part of that payment, depending on where the payments are being debited. So that's something to think about because while you might be, saving bank fees on one side, it might be sort of balanced out by the need to pay additional FX fees on the other side. So, I think that like a manual fix could be done for that if you're trading with banks to get an FX rate and then tag that to the payment. But that sort of defeats the point of the straight through processing in the first place. So that's something for treasurers to consider on this topic, I think.
I agree with that. And it's really, with each of these new partnerships, the corporate treasurer has to work out what it does for them. The fact that they're claiming all these general things, it's not a specific interaction with my systems and the way we work is what matters.
Those are very valuable thoughts right there in terms of being specific to the particular corporate treasury requirements. Our next topic for discussion is about renewable materials firm Stora Enso that has launched a combined green and sustainability linked financing framework to further integrate sustainability into its funding and financing activities. The combined green and sustainability linked financing framework allows Stora Enso to issue both green and sustainability linked financing instruments and a combination of the two. Jack, do you think the launch of Stora Enso's green and sustainability linked financing framework will further reinforce the connection between the sustainability agenda and the financing strategy?
Yes, and I think it's very important. The Stora Enso have got a very good platform for working out what is a sustainable activity and what isn't. What they're doing is linking it to a financing program that can bring the two together. And that's been one of the fundamental problems with the Green Initiative. I think this is very important. However, Stora Enso are going to have to work out how to position this for corporate treasurers. They're working with a big important bank like SEB, but they're not the only banks. They have to convince many different banks as well.
Ben, would you concur?
Yeah, absolutely. Agree with what Jack said there about this specific case. It's obviously a topic that we talk about a lot, ESG, and its relation to financing and other treasury activities as well. It's obviously something I think you discussed on the podcast last month, that Standard Chartered report, which found that despite 54% of companies being willing to prioritize positive environmental and social impacts over financial returns, less than 30% have actually made sustainability commitments or set targets. So there's a little disconnect in terms of what corporates want to do and what they are doing or perhaps can do. And I think, a framework for financing is absolutely key to that. And that's what you can then rely on to sort of support your conversations with your banking partners around potential green or diversity and inclusion related or any ESG related finance products?
Yeah, I think Ben hit the nail on the head when he said that this is getting rid of disconnects in the financing and sustainability arena. And that's really what we're doing here, is getting rid of disconnects, lack of partnerships, lack of understanding, because that's probably been the biggest problem with sustainability initiatives.
Yeah, you need that sort of strategic focus on it. It can't just be one-off bits and bobs. It's an organizational wide focus and exactly what a framework does. This is what our company does regarding these specific topics. So that's so important, I think.
That's precious advice right there, which is the key word being strategic focus. Our next news item that I would like to converse with both of you is about Bank of England hiking interest rates by 0.25 percentage point in its battle with inflation. The decision to impose a 12th consecutive hike takes the main borrowing rate for commercial banks in the UK to 4.5%, the highest since October 2008. The Bank of England expects inflation, which remains above 10%, to fall sharply over the coming months. Ben, do you concur with the Bank of England that inflation will fall rapidly from the middle of 2023, or do you think inflation will persist in the UK?
Well, it's a great question, Push, and it's something that has puzzled, I think, a lot of economists over the last couple of years regarding how inflation, which was, let's not forget, just going to be transitory. It was just going to be up a few percent, and then it'll be over when the post lockdown figures normalize. And now we're left where we are. Whether the Bank of England is at the end of its hiking cycle or not will depend on key market data. Obviously, inflation is one of the most important pieces of market data, and we get the inflation print for April next week. Annual UK headline inflation, as you say, in March was 10.1%, which was down from 10.4%, but market expectations were that it was going to dip to 9.8%. And that's partially due to the food inflation, which is crazy here at the moment, 19.1% in March on food. And also the core component of the inflation is very sticky. That remained at 6.2%. So that's why the Bank of England has their concern. Obviously, their target for inflation is 2%. And I think bank staff, it said in the last report from the May hike, bank staff now expect underlying UK GDP to grow by around 0.2% in Q1 and Q2 in 2023, compared to expectations from back in February that there was going to be negative GDP data. So that should help them perhaps consider pausing the hiking cycle sooner rather than later. Although obviously on this vote, it was 7-2 in favour of the hike. So the majority still see the need in the data to keep the moderate hiking continuing. But perhaps the worry about maybe squashing growth and sending us into a recession through additional rate hikes seems to have mellowed a bit. So that's, I think, a lot of the central banks are in a similar position, albeit the UK has slightly outlier inflation numbers. But obviously we saw the Federal Reserve and also the ECB do 25 basis point hikes in May. So I don't think the Bank of England particularly wants to be an outlier. It's probably, a little bit behind where the Fed is because the Fed was very aggressive in its early rate hikes. What I don't think we'll see any rate cuts this year. There may be a pause, but a couple of months ago, some of the forwards markets were pricing in quite a few rate cuts later in the year. And I think that's gone away now. That's not going to happen. So with inflation, it's tricky. It's particularly here in the UK, it always seems to defy expectations from one month to the next.
I think the central banks are struggling to relate their tool, which is a single tool, which is raising interest rate or dropping interest rates, with the fact that the infrastructure in countries is very different. So, for example, in the UK, where we've got extreme food price inflation, is a structural problem as much as it is an inflationary problem. It's driven by the structure that the government have adopted over the years. And similarly, if you look at different countries around Europe, you've got the same structural problem. I'm not sure I suspect in the long run we're going to see the central banks looking for new tools to help to manage inflation. Not quite sure what they are yet, but it's not enough just raising and lowering interest rates. So if I was a corporate treasurer, I would be very cautious about expecting any rapid reduction, if any, interest rates. And also I would expect some new tools coming on in next year, 2024.
Absolutely. And for treasurers, it's like the environment of the past year and a half is so different to what we had in the previous decade. It's really kind of a whole new way of operating, from every area, from your short-term investments, which is, wow, great. We might actually have some yield that we can make out of our short-term cash. But on the flip side, if you're kind of locking in financing, you've got to be really careful about how you go about doing that. What rate or approach to locking in a rate that you're going for with your financial partners. So it's a real cautious time, I would suggest.
From that cautionary piece of advice, let's move on to the final choice or the final topic for today, being which is the biggest or most important story of the past week and why? Jack, can I ask you to answer that first?
Yes, the big issue that's coming up in all sorts of different ways is for corporate treasurers and corporate for financing is how do you check the new approaches, the new technologies, that they really work and are going to sustain the efficiency of the department? That's the first question. And relating to that is, what is the size of the corporate treasury department going to be over the next 18 months? I think those are two huge questions for the corporate treasurer, none of which the answer is obvious.
That's a great point, Jack. Yeah, I totally agree with what Jack said there. One thing I wanted to mention is something that we covered in the CTMfile industry roundup yesterday, actually, 15th of May, if you want to go and look at it on the website, which is that chasing late payments costs European businesses 275 billion euros a year, according to the annual European payment report from Interim, who are a credit management services provider. That report also noted that businesses across Europe are spending more than 74 days a year. So if you look at the working year, that's it is more than a quarter of the working year in real terms, chasing these late payments. So this is time, money, energy that could be deployed elsewhere. And, at a time of high inflation that we've spoken about, rising costs, the labor markets are quite challenging. So soon after the pandemic, late payments are a real drag on firms, and it just seems to be something that's really impacting, particularly in this current moment that we're in. So that was just something I wanted to draw attention to.
There was a second thing, sorry, Push, that I'd like to raise, that is the integration of sustainability and financing that we saw in the first item. I think that is critically important, and I think it will affect how corporate treasury departments not only are automated, but also how they're organized and how they're structured.
And I hope our audience is listening to this, because I couldn't agree more. Sustainability, as well as when you mentioned the article on late payments, I would urge our audience to go and read that on CTMfile, the article on late payments. Thank you so much, Ben and Jack, for your informative analysis and insights. We would also like to thank our CTMfile audience for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you and have a great week. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.